I mean,
Great to be back.
yeah, it is such an environment as well. What is the main driver of your profitability, and how important are rates on the curve, relatively speaking?
I think that, people are starving for new products, services. We fell into an industry that was in dire need of a fresh look at how to conduct the business of finance. And we're just there to facilitate all this. There are folks that figured it out. They really they have listening ears to their consumers, to their merchants, and we're just facilitating that by providing the infrastructure play behind them.
What does loan growth look like these days at Cross River?
It's actually pretty robust. I mean, as you can imagine, post-pandemic, everybody stayed home. They were shopping at home. They all used, folks like Affirm and Upgrade and Upstart and many others in order to purchase life. And that's why the loan growth has been spectacular, particularly over the past 3 years. And once they're in it and they get to taste, the facilitation of the loan extension through online means, then they're staying with it. They have no reason to go, back to the traditional ways of shopping.
Are these primarily consumers, or we know you guys sort of came on the scene in a big way with the PPP loans? Are these a lot of small businesses? What's the mix?
Yeah, it's predominantly consumers. That's what we focus on. But we're slowly but surely transitioning as well and trying to diversify our revenue, our growth, as well as revenue channels towards the small business arena, particularly like you rightfully said. PPP put us on the map with a lot of small businesses that we managed to help get bailed out, to the tune of about 500,000. So these have a way of saying thank you by coming back to us and saying, is there anything else that you can do for us? And we want to be there and answer the call when they need it.
So let me go back to the consumer piece, since that is the lion's share for you. Maybe you can give us some insight into credit quality, sustainability of consumer spending. There's a lot of confusion in the market because traditional retail, the goods side is slowing, the housing side is obviously slowing, and yet services may be taking off. What's going on with the consumer balance sheet?
I think that, honestly, post banking debacle in 2008, there's one thing that the regulatory environment did very well is to impose the concept of affordability to credit. And now, fast forward some 14 years, we're in the midst of definitely a financing boom, and people have learn these lessons in order to extend a loan only if the consumer can afford it. The thing is that with data analytics, there's a way to extend a loan to folks that did not have access to credit previously, and that has definitely broadened the credit spectrum. So there's a confluence of events here. Number one, like I said, affordability to credit is critical in order to extend that credit to folks. And number two, data analytics enhance or broaden that credit spectrum to provide it to more people.
But would you say you have any concerns about the macro environment? Do you think that the growth, the spending that we've seen is sustainable?
Listen, it's a great question. I'm not an economist. I just react to the market. We're very adaptable and nimble, and we stay within our lanes. What we do know well is that if our consumers need something, we're there for them. So we can only compose with the changes. We're not, one of the big four banks in the country, but we definitely benefit from a host of consumers that do need a refreshing outlook on how to conduct their financial life, and that's what we're here.